We today propose to slash the corporate tax rates for domestic companies and also for new domestic manufacturing companies. There are other fiscal reliefs also which we are bringing about. And this set of amendments are being brought about in the taxation laws through an ordinance which we will pass, which is actually passed only probably a couple of minutes ago. And these amendments to the Income Tax Act 1961 and the Finance No. 2 Act of 2019. I'll now give you the salient features of what these proposed tax rate cuts are. Number one, in order to promote growth and investment, a new provision has been inserted in the Income Tax Act with effect from fiscal year 2019-20, which allows any domestic company an option to pay income tax at the rate of 22%, subject to condition that they will not avail any exemptions or incentives. The effective tax rate for these companies shall be 25.17%, inclusive of all surcharges and cess. So the effective tax rate for these companies shall be 25.17%, inclusive of all surcharge and cess. An important aspect here to add is also such companies shall not be required to pay any minimum alternative tax. No MAT on them. No MAT will be applicable on them. So this is the first. The second, in order to attract fresh investment in manufacturing and thereby provide a boost to Make in India, another provision has been inserted to the Income Tax Act with effect from fiscal year 2019-20, which allows any new domestic company incorporated on or after 1st October 2019, making fresh investment in manufacturing an option to pay income tax at the rate of 15%. This benefit is available to companies which do not avail any exemptions or incentives and commences their production on or before 31st March 2023. So they should commence production on or before 31st March 2023. So new companies which are getting incorporated 1st October 2019 or after, which also commences its production on or before 2023, 31st March, can avail of this at 15% rate. The effective tax rate for these companies shall be 17.01%, inclusive of all surcharge and cess. Again, in this case too, also, such companies shall not be required to pay any MAT. I move to the third. A company which does not opt for the concessional tax regime and avails the tax exemption or the incentives shall continue to pay tax at the pre-amended rate. However, these companies can opt for the concessional tax regime after expiry of their tax holiday or exemption period. So if they are already enjoying some exemptions and also some tax holidays, and if they would want to continue in that, they have a choice to do so. But if they want, that is, if they want to continue with the existing exemptions, that's an option we are giving. However, these companies can opt for the concessional tax regime after the expiry of their tax holiday or the exemption period. So once their exemptions, which they are enjoying now, are all expired, they can opt to move on to this regime which we are announcing today. After the exercise of the option, suppose their period is over, concessional and exemption period is over, the tax holiday is over, they opt to come over to this regime. After the exercise of the option, they shall be liable to pay tax at the rate of 22%, which is what is announced today, and option once exercised cannot be subsequently withdrawn. That's just to make sure that you can't keep flip-flopping. Further, in order to provide relief for companies which continue to avail exemptions and incentives, the rate of minimum alternative tax has been reduced from the existing 18.5% to 15%. I move to the next. In order to stabilize the flow of funds into the capital market, it is provided that the enhanced surcharge which was introduced by the Finance No. 2 Act of 2019, the budget of July 2019, shall not apply on capital gains. The enhanced surcharge shall not apply on capital gains arising on sale of equity share in a company or a unit of a equity-oriented fund or a unit of a business trust liable for securities transaction tax in the hands of an individual, HUF, AOP, BOI and AJP. So that's the fourth. I move to the fifth. The enhanced surcharge shall also not apply to capital gains arising on sale of any security, including derivatives, in the hands of foreign portfolio investors. Shall I move to the next? In order to provide relief to listed companies which have already made a public announcement of buyback before 5th July 2019, it is provided that tax on buyback of shares, it is provided that tax on buyback of shares in case of such companies shall not be charged. The total revenue foregone for the reduction in corporate tax rate and other reliefs is estimated 1,45,000 crores per year.